Good morning, good afternoon, good evening. Welcome to the session on the role of central banks in enhancing cyber resilience for the financial sector. My name is Dorothée Delors. I'm part of the Payment System Development Group of the World Bank. The session today is organized jointly by the World Bank and the International Monetary Fund for the FIGI Symposium 2021 and the World Bank Global Payments Week 2021. The Financial Inclusion Global Initiative, FIGI, is a partnership between the World Bank Group, the Committee on Payments and Market Infrastructures of the Bank for International Settlement, and the International Telecommunication Union, ITU. It is funded by the Bill and Melinda Gates Foundation to support and accelerate the implementation of country-led reforms to meet national financial inclusion targets and the global goal of universal financial access. FIGI funds national implementation in 3 countries, China, Egypt, and Mexico, and it supports working group on 3 sets of challenges for universal financial access: electronic payment acceptance, digital ID for financial services, and security, infrastructure, and trust. This is the 3rd and final edition of the FIGI Symposium as a forum for dialogue between telecom and financial sector authorities to scale up digital financial services. The Global Payments Week is a biannual event organized by the Payment System Development Group of the World Bank for Payment System Department of Central Banks and Securities Regulator to share experiences and build capacity on leading payments and financial market infrastructure topics. A few housekeeping rules. Your microphones are muted. Please use the Q&A window to channel your questions, and we will do our best to answer them or share them with our presenters. To deliver opening remarks, it is my pleasure to introduce Mr. Aditya Narain, Deputy Director in the Monetary and Capital Market Department of the International Monetary Fund. Aditya's oversees MCM work on financial supervision and regulation and its overall technical assistance function. He's been closely involved with various international regulatory reform initiatives and currently represent the IMF on the Basel Committee on Banking Supervision, while also attending the plenary meetings of the Financial Stability Board. In recent years, he has led the IMF teams that developed the Bali FinTech Agenda, introduced the Financial Sector Stability Review, and created the Cyber Risk Supervision Program. Over to you, Aditya.
Thank you, Dorothy. It's a great pleasure for me to welcome all of you here today as we discuss one of the most important issues which confront us in this era of digitalization. That is the role of central banks in enhancing cyber resilience in the financial sector. But let me start by first thanking the Gates Foundation, the ITU, the CPMI, and of course the World Bank for convening the FIGI Symposium and placing such a focus on financial inclusion. From the fund's perspective, this focus is of critical importance. IMF staff research has shown that financial inclusion is crucial for economic growth and reducing inequality. Increasing access to financial services for low-income households, SMEs, and women is associated with a 2 to 3 percentage point higher average GDP growth. Not less important, financial inclusion also reduces inequality and brings the most underserved and vulnerable sections of society into formal financing channels, giving them both the opportunity and the means to contribute to and benefit from economic growth. The FIGI Symposium is a wonderful initiative to facilitate this process and aligns very well with our mission to promote stable and inclusive growth across our membership. Again, as is now very well established and is also reflected in some of our recent research, technology has been the most important driver of financial inclusion in recent years. A large share of the gains in financial inclusion has been driven by digital financial services. This is a trend which is further accelerated by the pandemics amid social distancing and lockdowns, which helped leapfrog the acceptance and absorption of technology among all classes of consumers and activities. Of course, the greater use of technology in everyday finance comes with risks that can potentially also be disruptive, systemic, and threaten financial stability. In recent years, risks to cybersecurity, data privacy, financial integrity, as well as the risks created by the new forms of financial exclusion, such as data and algorithmic biases, differentiated access to digital infrastructure, and lack of digital and financial literacy, are becoming more relevant and need to be managed. It is towards this goal that in 2018, the IMF and the World Bank together launched the Bali FinTech Agenda, which lays out the broad principles for the safe development and deployment of technology in finance, including in support of financial inclusion. But perhaps the key risk that presents a clear and imminent danger is that of cyber risk. Unsurprisingly, our expansion of cyberspace and technology has also increased the potential attack surface. The increasing digitalization of financial services in combination with the presence of high-value assets and data make the financial system a target of choice and vulnerable to cyber incidents. The high level of interconnectedness across financial institutions, financial markets, and financial market infrastructures, and particularly the interdependencies of their IT systems, constitute a key vulnerability as a localized cyber incident could quickly spread across markets and jurisdictions. And this, of course, is the key distinctive differentiation between cyber risk and all other forms of financial risks and operational risk. A cyber incident has the potential to crystallize and propagate throughout the system at a significantly quicker pace than other types of operational risk. And furthermore, in the case of cyber attacks, some threat actors pursue a deliberate objective to cause major disruption and harm to the financial system and the real economy. Additionally, cyber attackers are increasingly sophisticated, highly resourced, and very persistent, and often young. Such cyber attacks can threaten global financial stability by disrupting the interconnected operational network and its critical nodes, resulting in the loss of data, systems, and critical infrastructure. From a financial inclusion perspective, a cyber criminal will not discriminate between an end user and a financial institution, and therefore it is essential that the drive towards inclusion is matched with efforts to ensure the security of the financial system and maintaining confidence within it. Central banks, the topic of today, they have a key role to play in enhancing the cyber resilience of the financial system. As is well known, they discharge a range of critical functions, and in addition to the explicit goals of maintaining price and financial stability, they operate and/or oversee the payments and other financial market infrastructure and are often the prudential supervisors of banks. In addition to these explicit goals, they also often have implicit goals of supporting the development of new financial markets, and more they are putting their weight behind efforts as wide-ranging as inclusive growth and sustainable development. In a sense, they ensure confidence in the system, promote financial inclusion, and catalyze innovation, contributing to the development of the economy. While cyber risks threaten the smooth functioning of central banks and financial markets in many ways, we at the fund are most concerned about the implications on financial stability in our membership. Financial systems are at varying states of readiness to manage cyber attacks, and the international response is still fragmented. Building on the foundation of strong cyber hygiene and preventative measures, our staff have suggested that there are 6 major gaps that should be addressed and which could considerably reduce cyber risks and help safeguard financial stability. These are improving the incorporation of cyber risk into financial stability analysis, enhancing the consistency of regulation and supervision, improving response and recovery, strengthening information sharing, enhancing the deterrence of cyber attacks, and strengthening capacity development. Of course, addressing all of these challenges will require a collaborative effort from central banks, standard-setting bodies, national regulators, industry associations, private sector, law enforcement, international organizations, and other capacity development providers and donors. At the IMF, our current focus is on helping central banks and supervisory agencies, particularly in the emerging markets and developing economies, develop their capacity to strengthen cyber resilience in their financial systems, while also ensuring that their concerns and perspectives are properly reflected in international discussions and appropriate technology is transferred from the advanced economies to help them in this effort. I'm very pleased that the workshop today is going to be discussing these very different challenges faced by the central banks. We are going to learn about the cyber threat landscape and the future trends. We're going to learn about the different challenges, experiences, and approaches from some very distinguished central banking speakers, notably from Canada, India, Singapore, South Africa. We learn from the CPMI, the Dutch National Bank, the European Central Bank, and the National Bank of Georgia about the different tools and initiatives that they have developed or are developing. I believe that the lessons we learned today will equip us the ideas, inspiration, and approaches that we can take into consideration in our own journeys. So to this end, it's a real pleasure again to welcome you all to this virtual workshop, and I'd like to thank our distinguished speakers and panelists for their participations and the World Bank for co-hosting this session on cyber resilience with the IMF. I wish you great success today, and I look forward to learning from you. Wherever you are, stay safe, and thank you very much.
Thank you very much, Aditya. As an introduction, my name is Emran Islam, and I will be co-hosting this event with my colleague from the World Bank, Dorothy. To move forward, as per the agenda, it's my pleasure to introduce Rob Dartnell, who will be speaking about the cyber threat landscape, the current and the landscape for the foreseeable future. Rob is Head of Intelligence and CEO at the Security Alliance. Over the last decade, Rob has worked in the intelligence community, both in the public and private sectors, which gives him a very diverse and unique understanding of the threat landscape. He's performed hundreds of threat and cyber resilience assessments across multiple regions and sectors, with a particular focus on delivering CBEST, Tiber, and ICAST engagements across the financial services industry. And for the last 5 years, this work has focused extensively on building information and intelligence sharing frameworks and communities for multiple European countries, central banks, and global institutions. So handing it over to you, Rob.
Thank you, Emran, and thank you all for inviting me. It's a great pleasure to be here. Hopefully we'll get some slides up in just a second as well. I won't do an introduction, thanks to Emran's brilliant introduction. But in reality, what am I here for and why am I here? As Emran was saying, I have the great pleasure of hosting various information and intelligence sharing communities across financial market infrastructure and financial services. That means I'm fortunate enough to speak to SOC analysts, incident responders, intelligence analysts, CISOs, CIOs, central banks, organizations, and occasionally the odd threat actor. And I just want to impart some of that knowledge around what we've gained over the past 12, 18 months and what that potentially means for the future. Now, I've only got 15 minutes to talk about everything that's been going on in the cyber domain, which isn't a lot. But in reality, I could possibly do it in one slide. And if we could just go to the next slide. And that is this. If I had to pick one word for not only the last 6 months, but the last 12 to 18 months for everything that has happened within the cyber threat landscape, all of the operations, all of the incidents, it's relentless. You know, the words that go with that: persistent, continuing, constant, absolutely truisms of this. It has been increasingly intense. We've gone through some significant peaks and troughs, and it's been hard work, but we've all pulled it together and we're slowly getting there. Now, I'm fortunate in that I'm not actually a CISO. I know that there's quite a few CISOs on this call, and I'm sure when you've been working in a financial institution anywhere in the world during the last 18 months and the last 6 months, it's most certainly felt like the relentless heat of the desert at times, sometimes feeling alone. So hopefully over the next 12 minutes, I can do a good job of setting out or setting the scene really for why we need to do all of the things that we need to do. So if we can just move on to the next slide then. So where have we been? What has really the past 6 months, possibly even a little bit longer, been for us? Now, if we actually look at the bottom of the first slide, what we're looking at here is that, you know, in reality, maybe 18 months ago, we were sitting at guarded in terms of threat levels. You know, we were dealing with some challenges, but we could get over them. And then obviously we came into COVID and the pandemic. And about this time last year, we moved up to the elevated position because there was a lot going on. We got to Christmas, certainly in this part of the hemisphere, the northern hemisphere, you know, we were able to breathe a little bit over December. And then as we got into February and March, things started to escalate again. Nation state espionage and proxies, organized crime group activity, it was all significant. And those levels started to increase, and we've been sitting at elevated now for a number of months. Now, it doesn't matter where we look, whether or not we're looking at nation states, organized crime, hackers, hacktivists, researchers, and what part of financial services we look at. So whether or not we're talking insurance, pensions, asset managers, fund managers, payment providers, critical infrastructure, even central banks, at some point over the last 12 months and really the last 6 months, we've all really dealt with quite a lot really, and I'll come on to that fourth bullet point in a moment, but that's where a lot of the problems we've had have lied. So whether or not we've had nation state espionage operations targeting fintech across Europe and source code, injection into our supply chain in terms of software and technologies. We talk a lot about ransomware and extortion, which others are also describing as the other pandemic, which we'll talk about in a second as well. And the fact that something like ransomware and leak made the G7 summit this week as well. We've had DDoS campaigns against central banks and financial services generally, extortion campaigns against central banks as well. So a lot going on, as well as even hacktivist activity being quite prevalent as well for some of those institutions. We've even had insurance companies purposefully targeted so that they can find out which companies have cyber insurance and what their security posture looks like, so they know who they should go and target as part of their extortion campaigns. So a significant amount has really happened. Now, we've also had this new and rapid adoption of technologies. Now, I'm sure over the last 12 months, you've all been to many webinars about the effects of COVID-19 on the cyber domain, and we talk about these new technologies. But what that really means is we're setting up lots of new shadow IT. Most organizations don't know that some of that shadow IT actually exists. But also from a threat point of view, we're bringing in lots of new technologies, new vendors, new people to the game. We don't know where those vulnerabilities sit. But also, when let's say you're an advanced nation state threat actor, you are aware of a vulnerability or you've got some code to exploit that vulnerability in a piece of software, you're going to use that when you can get the most return on investment. Now, evidently over the past year, as people have adopted a particular technology on a much wider scale than they previously had, there's much greater chance of them going from, instead of compromising 1, 2, 300 organizations with that vulnerability, potentially getting a foothold in thousands and upon thousands of organizations. Hence why it has been relentless. Everybody has been trying to have a significant effect on their offensive cyber operations as they possibly can. Which brings us on to the supply chain. So the supply chain really has had a disproportionate effect on all of us. As I said, I'm really lucky to speak to lots of different roles in lots of information and intelligence sharing communities across the world. And when I talk to these organizations, at some point, most of us have been affected in the last 12 months by a breach within our supply chain. It doesn't matter if that organization has direct access to our networks, or whether or not they just hold sensitive data on us. Most of us has had to deal with that experience in the last 12 months, certainly the last 6 months as well. And unfortunately, that's an increasing trend. There's certainly, when we look at the numbers, some trends as well around some of those IT service providers, security providers, consultancies being intentionally targeted in order to get access to financial services organizations. But with that, people have to take advantage. Now, I know this is not the nicest thing to think about, but organized crime groups are businesses. And like any person setting up a business, you want to take advantage of a situation. Now, at the moment, there's great opportunity for these actors. So they're pushing hard, working every hour, not taking holiday, constantly developing, growing their groups, bringing in more affiliates, doing more targeted attacks, whilst also doing mass attacks as well. They're also bringing in old techniques, mixing them with new techniques. We've seen everything from bringing in DDoS acts at the same time as extortion, ransomware attacks to put more pressure, even harassing executives, DOSing executives and their families in order to put pressure on them during compromises as well. So not only are we dealing more ransomware or more malware full stop and more operations, we're dealing with continuously changing TTPs as well. And then we've got some concerning DDoS activity. Now, there's probably been 3 significant campaigns over the last 18 months. The one that we're talking about now and that we're dealing with now, there's some really interesting stuff that they're doing around reconnaissance, what they're probing, how they're running different techniques just to see what happens. So what that actually turns into the midterm, we'll wait to see. But unfortunately, I have a bit of an assessment for you later on that. So in terms of the moving on to the next slide, and we can talk about today. Now, if we're talking about today, so why is this slide quite light compared to talking about things that have happened? But it's because unfortunately, everything that's happened over the last 12 months is still happening today, right now, 15th of June. And at the same time, we're also dealing with the ramifications and everything that has happened to us over the past 12 and 6 months. So of course, we're observing that DDoS activity at the moment, but also we're looking at these breaches within financial services, of which there are a lot, and we're all quite aware of that. But unfortunately, significant numbers of breaches within our supply chain as well. Now, some of those are coming forward and we're aware of those, and some of them are not coming forward, which is not great. We've all seen great examples of how to deal with breaches and bad examples. Now here, we have some knowns. We also have some known unknowns, and there's a number of unknown unknowns. Now, what do I mean by that? It's all quite confusing, but we know that there's about to be some organizations that come forward that say that they've been breached, and financial services organizations will be part of that, as well as their supply chain. There's also organizations that we know have been compromised, but because of their level of maturity, they have no idea that they've been compromised. But then unfortunately, because of the sheer amount of operations that have been going on, just the absolute cadence there are a lot of unknown unknowns. And that's what we're going to have to deal with. There are a lot of organizations that we just don't know were even targeted, let alone compromised. And they most certainly don't know that either. So there's a bit of a shadow that we need to investigate. And this is likely to continue at the current levels. So what we're dealing with is likely to remain in the short term over the next, we're talking June stroke into July. The midterm potentially looking a little bit different as well. So we can just go on to the next slide as well and talk about what we think might be happening into the future. Now, we'll keep an eye on that DDoS activity. We've already seen that there has been services disrupted and systems taken offline. If we see some pivoting into other areas, other regions potentially that are less mature and not used to these type of techniques, we expect to see more services being taken offline. We're going to see more and more supply chain breaches and breaches within financial services. Absolutely. There's been a pattern for that and they will continue. But I think the fourth point is quite important here as well. Now, hopefully what you would have noticed during this talk is I've not talked about any individual organization compromise. That's not fair. And I certainly don't want to bring notoriety to any individual threat actor either. So I've not really talked about them. But I just want to very briefly talk about SolarWinds. Now, I don't want to talk about the technical elements of that, but actually what it was and what it was not. Now, there was obviously a lot of media coverage of that. And there was lots of talk about this being unprecedented and a complete game changer. But in reality, I think some of you probably know that actually targeting the supply chain or critical points or single points of failure has been a common technique of nation states in the cyber domain for quite some time. And it's only a trick that has been taken from conventional intelligence operations over the past few years as well. If you can compromise a single point and then get access to hundreds, if not thousands of other points, then of course that is going to be an objective for you to achieve. So we're going to see more of that. Now, of course, we're going to see more ransomware and leak type operations as well, depending on whether or not nations get together and start dealing with this, whether or not there's any fallout from the G7 and the meeting in Switzerland, we will see. But we have to also think about nation state activity. It's been quite a permissive environment for a lot of people to conduct their operations in. While there has been so much going on in the world, it's a little bit like the stock market. When there's so much disruption, there is so much to take advantage of, and there will always people that will know how to do that. So certainly these nation state espionage operations, organized crime group operations, they're going to take advantage of this current disruption. And this disruption is going to exist for at least the next 12, 18, 24 months. But what does that look like into the future? Very shortly, remote possibility threat levels will reduce. And I mean remote possibilities. It's more likely they're going to stay where they are for the mid and probably into the longer term as well. Its possible threat levels will increase to high if we have a couple of more significant SolarWinds type events, whilst we're also dealing with ransomware and leaks. And if we layer on top the breaches that have happened that we don't already know about coming in at the same time. Slightly longer term, we're certainly seeing this trend of targeting new technologies, fintech, crypto tech, these types of things increasing, and that's also likely to increase into the mid to long term. Regional pivoting as well. So history has shown us that as operations are successful and refined in one area, they will then move to other regions as well. And let's not forget this current trend of supply chain targeting as well. So that's really where we've been, where we are, what we're likely to see in the future. Hopefully you understand why I picked the word relentless, because it certainly feels like that. But most importantly, hopefully I've set the scene enough for you over the past 13 and a half minutes to discuss further why we need to do some of these initiatives and look at some of these tools as well. So that's me. Thank you very much for your time. All done.
Thank you very much, Rob. Well, that was quite scary, but thank you for setting the stage with your presentation. Now we will ask two central bankers what they're doing about this. So what we will ask Mr. Yew Seng Ten and Mr. Vasudevan to talk about some of the key challenges faced by their respective central banks in the field of cyber resilience, their experiences in addressing them, and an insight on the measures that they have implemented to deal with them. Yew Seng is Executive Director in the Technology and Cyber Risk Department and Chief Cybersecurity Officer at the Monetary Authority of Singapore. Yew leads the Technology and Cyber Risk Department, which is responsible for developing cybersecurity strategy and policies for the financial sector and for supervising financial institutions' technology risk management. In November 2017, Yew was appointed as MAS Chief Cybersecurity Officer to strengthen the cyber resiliency of MAS and of the financial sector. Mr. Vasudevan is Chief General Manager at the Reserve Bank of India. He leads the payments and settlement system function in the Reserve Bank of India, which includes framing policies, regulating, supervising, facilitating innovation, and playing a catalyst role in the payment space. Over to you, Yew.
Thank you very much, Dorothy, for the introduction. A very good morning, afternoon, and evening to everyone. I'm Yao Sing from the Monetary Authority of Singapore. First of all, I would like to thank the World Bank and the IMF for inviting me to speak at the 2021 Financial Inclusion Global Initiative Symposium. Cyber threats have become more prominent in recent years as more and more organizations are embracing information technology to help improve operational efficiencies and reduce costs. It is my pleasure to share on MAS's approach in building cyber resilience for our own organization, as well as for our financial sector. We are still learning and do not have many answers, as cybersecurity is a long and arduous journey where there are always new risks and surprises to be dealt with along the way. Next slide, please. So as the financial sector becomes more digitalized in our move to become a smart financial center, we need to ensure that our IT environment remain secure and resilient for the participants in the financial ecosystem. The frequency, scale, and complexity of cyber attacks have been mounting, and we have witnessed attackers carrying out sophisticated and persistent attacks that are difficult to identify and defend against. These attacks have and could potentially result in severe disruption of financial services and data breaches. Next slide, please. So MES Cyber Research and Intelligence team has observed that while the overall cyber threat level remains largely similar to pre-COVID-19 period, globally, there has been an uptick in COVID-19 themed cyber attacks and scams where criminals attempt to trick bank customers to divulge their online banking credentials. With more FI employees working from home and accessing systems remotely via the internet, the attack surface area has become larger. Another risk that has regained our interest recently is the supply chain attacks, which have the potential to generate far-reaching ripple effects due to the interconnectedness and interdependencies between IT ecosystems. The compromise of a single trusted supplier can result in multiple victims, some of which could be major technology vendors with even larger customer bases. Such was the case in the SolarWinds breach, which was reported late last year. These attacks underscore how threat actors can compromise multiple organizations in one fell swoop by targeting and exploiting popular external vendors and software. We can move to the next slide, please. Thank you. I will now speak on MES cybersecurity strategy, driven by the multiple roles that we play. The MES is both a central bank and an integrated financial regulator. First, similar to many central banks, MES operates the real-time gross settlement system for settlement of Singapore dollar interbank funds transfer. Second, as a financial regulator, MES seeks to foster sound financial services sector through its prudential oversight of all FIs in Singapore. And thirdly, MES promotes and facilitates the development of infrastructure, adoption of technology, and upgrading of skills in the financial industry. Ultimately, as a central bank, there's a need for us to have a robust cybersecurity strategy to secure our internal systems and RTGS. And as a financial regulator, we need to have a cybersecurity strategy to develop cyber resilience of our financial sector. Next slide, please. And when developing MES internal cyber resilience strategy, we had adopted the CPMI IOSCO guidance on cyber resilience for financial market infrastructures, as well as FSB's Cyber Incident and Response Toolkit of Effective Practices. MES takes the stance that we may not be able to prevent all cyber incursions despite our best efforts. And given this, we seek to build muscles to enable us to detect cyber intrusions early as well as respond and recover swiftly and safely from cyber attacks. Next slide, please. And to promote a sound and progressive financial sector in Singapore, MES needs to ensure that risks confronting the financial sector, including cyber-related risks, are properly managed. We adopt a four-pronged strategy towards IT and cyber resilience for the financial sector. Next slide, please. The first pillar is in our strategy is regulation and guidance. We use both legally and non-legal binding instruments to regulate FIs. First, we set out legally binding requirements in the technology risk management notices to impose requirements for identifying critical systems and maintaining high system reliability, availability, and recoverability. Our cyber hygiene regulation prescribes a set of essential cybersecurity practices that all FI must put in place to manage cyber threats. Many of the cyber breaches were often preventable, as they were usually due to omission of basic security practices. Second, we established the technology risk management guidelines based on industry best practices for the management of technology and cyber risks. We also regularly issue supplementary guidance in the form of circulars and advisories to provide further recommendations to FIs in managing technology and cyber risks. Next slide, please. And given the cross-border nature of cyber risks, there is a need for greater coordination and collaboration across the financial authorities to strengthen cyber resilience. And MAS participates actively in international standard-setting bodies in an effort to establish and promote common standards and guidance on cybersecurity at both the national front and internationally. For example, MAS play an active role on the working groups of Financial Stability Board and CPMI IOSCO in developing global guidelines and toolkits. Next slide, please. The second pillar in our strategy is supervision. As an integrated supervisor, MAS supervises all FIs operating in Singapore, including banks, insurers, financial market infrastructures, and brokers. With over 1,600 FIs in Singapore and limited resources, our supervisory approach is risk-focused. In this regard, we have a supervisory framework that's based on risk and impact model. And the objective is to direct supervisory focus and resources towards FIs that have systemic impact to Singapore. We also accord greater supervisory attention to FIs that are assessed to have weaker risk management processes and controls. And where there are gaps or areas for improvement, we will require FIs to take actions to remediate them. Let's move to the next slide, please. So the third pillar in the strategy is information sharing. We believe that cyber surveillance and information sharing are important aspects to maintain a high level of situational awareness. MAS operates the Financial Sector Security Operations Center, or FSSOC in short, that monitors the cyber and threat landscape. The FSSOC is part of a tiered national surveillance framework. So FIs, as the first line of defense, are responsible for the monitoring of the systems and networks to detect and respond to security events in a timely manner. The MAS Financial Sector Security Operations Center comes in to complement the FI's efforts and to connect the dots across the sector. The Security Operations Center also gathers threat intelligence from sources such as the commercial threat intelligence providers, industry information sharing centers such as FSISAC, and our National Cybersecurity Agency. MAS regularly shares cyber threat information with FIs through advisories and alerts, and our secure intelligence sharing platform called the FinTel. Next slide, please. On the domestic front, we work closely with government agencies such as the Cybersecurity Agency of Singapore, the Infocom Media Development Authority, and the Government Technology Agency to exchange information on cyber intelligence on a timely basis. We have also been working closely with the industry associations such as the Association of Banks in Singapore, Standing Committee on Cyber Security, to promote information sharing among financial institutions. Internationally, we have been reaching out to like-minded regulators and central banks to establish bilateral and multilateral information sharing arrangements to collectively build cyber resilience in the sector. We believe that close cooperation amongst regulators through multilateral forums and bilateral exchanges can help us to identify common problems and solutions. The Central Bank's Regulators and Supervisory Entities Forum, or in short, CIRIS, that was established by the FSISAC is a good example of multilateral information sharing initiative. CIRIS serve as a useful platform for financial authorities to share cyber threat information and knowledge. I would encourage you to consider signing up as a CIRIS member to be plugged into the cyber information sharing network for financial authorities. Next slide, please. The fourth pillar in the strategy is capability development. MAS has been partnering the industry on initiatives to uplift and validate the cybersecurity capabilities of the financial sector. MAS and the Association of Banks in Singapore founded the Standing Committee on Cybersecurity, and the committee is an industry-led platform where C-suite executives involved in technology and cybersecurity collaborate on industry-level initiatives. These collaborations include raising the industry's awareness on cybersecurity issues and establish industry many guidance in areas such as data loss prevention, cloud computing security, penetration testing, and red teaming. In addition, we have been engaging the industry on multiple fronts to pursue cyber collaboration. For example, in 2019, MES partnered with the industry to conduct a cyber-themed business continuity exercise, and this was attended by more than 140 financial institutions. Next slide, please. It is important to ensure technology-related risks are well guarded against, as institutions place greater reliance on cloud service providers, open application programming interfaces, and rapid software development and release. Recently, we issued and enhanced the technology risk management guidelines to raise the bar for technology and cyber risk management amidst the increasing complex technology threat landscape. A copy of the guidelines can be found on the MES website. During this COVID-19 period, as financial institutions have adopted large-scale remote working arrangements that are expected to continue in the into the new normal, MES and the Association of Banks of Singapore have issued a guidance on managing operational risk arising from remote working arrangements. And to enhance our cyber intelligence and analytics capabilities, MES has implemented a cyber threat intel management system called the C-Team, which enable us to ingest multiple sources of threat intelligence and present them in a more coherent form for analysis within a single pane of glass. And this in turn allows us to share relevant cyber threat information with FIs in a very timely manner. On cyber collaboration with the industry, MES has worked with members of the Insurers Standing Committee on Cybersecurity to conduct a bug bounty program. This helped to complement our FI's existing cybersecurity programs, as they were able to tap on the collective capabilities of global cyber experts to identify security vulnerabilities in major insurance systems and to enhance the overall cyber resilience of the insurance sector. As public cloud services are adopted by a growing number of FIs to meet their business and operational needs, especially with the accelerated pace of digital transformation during the COVID-19 pandemic, we are concerned over the rising systemic risk associated with a handful of cloud service providers. A service outage at one of the major cloud service providers could lead to a massive disruption of IT systems. And these risks should be addressed. And we can go further in working with financial regulators, FIs, and service providers on possible collaborative initiatives to strengthen cloud resilience. One possible way is to carve out a financial service cloud, community cloud for the FIs, and form a cloud oversight forum that broadly mirrors that of the SWIFT Oversight Forum. Potentially, this can provide financial authorities an effective platform to collectively engage major cloud service providers on common supervisory and regulatory issues around the FI's adoption of cloud services. Global financial regulators will then be able to leverage on the Cloud Oversight Forum to exercise some form of supervisory oversight on the financial cloud or FinCloud and engage the CSPs on prudential issues. We have also recently issued an advisory on cloud risk management to set out the due diligence that financial institutions should perform before engaging in public cloud services. Financial institutions are expected to develop a public cloud risk management strategy that considers the unique characteristics of public cloud services. In closing, I would like to add that the cyber threat landscape is rapidly evolving, and we have to constantly strengthen our cyber capabilities as the custodians of mission-critical systems such as the RTGS system. As financial regulators, we need to continue to adjust our supervisory approach and toolkits to maintain a safe and sound financial sector. With that, I've come to the end of my presentation, and thank you for your attention.
Thank you very much, Yeu, for this very comprehensive and very interesting presentation on what MAS is doing on cyber resilience for the financial sector. We will now turn to another very active central bank, the Reserve Bank of India. Over to you, Vasu.
Thank you, Dorothy, and hello, everyone, and a very good morning, afternoon, and evening to each one of you present here. I'm very grateful to the organizers of this grand FIGI symposium for inviting me from the Reserve Bank of India to share a few thoughts and practices we follow on cyber security. When I say we or RBI, I'll be referring to Reserve Bank of India. Cyber security is always an issue of significant importance, and given the present pandemic, it's extremely contemporary as well. The last 15 months experience has reset boundaries and frameworks for handling of risks, more so associated with cyber security. Cyber security practitioners actually are very scared. They abhor giving remote access, as also about having high number of endpoints. They are also more comfortable having physical access to their resources. But all these things have changed. Welcome to virtual meetings, electronic access to documents, remote security management, and so on. In fact, this period of 15 months, has been one of the best examples of live DR drills involving the entire range of players, and these have been handled successfully as well. Thankfully, these 15 months in the Indian financial sector context have been extremely smooth and very well managed. When I say the aspects, I am referring to, of course, the use and resilience of technology, the availability of systems, cyber security, cyber safety, innovative practices, staff preparedness, vendor management, and related activities. This is again because of the bold and quick decisions taken by the top management in RBI with close monitoring on implementation and periodic updates to them. Renuka, next slide, please. You was just talking about the role of MAS in the financial sector space. Here you will see the role of RBI in the Indian context. RBI is a full function central bank managing all activities relating to monetary policy, currency distribution, forex reserves, regulation and supervision of banks and non-banks. This apart, developmental roles like financial inclusion, financial literacy, consumer grievance redressal mechanism, data collection, etc. active roles are also included. A major activity is also of regulating and supervising the payment and settlement systems in the country, including as an operator of centralized payment systems like the real-time gross settlement system and the popular National Electronic Funds Transfer System, which handles both large value and small values. And in certain situations, like we have recently seen in the digital lending app space, the expectation is that the RBI should regulate them as well as a residual regulator. A few figures, if you can see in the small blue boxes on the slide, represents the enormity and scope of the activities of RBI in securing the infrastructure, and this definitely is a very, very mammoth activity. You would all know India follows the bank-led model for financial inclusion for efficient leveraging of scarce resources and to meet the enormous demands of the population. And we do believe in interoperable infrastructures, be it for linking bank accounts, ATMs, the debit, credit, and the prepaid cards, the POS machines, or even the QR codes. Why I'm trying to highlight this interoperable activity is because when you have interoperability, the risk of cyber safety and security increases. So are we trying to willingly take such risks, and how do we manage them is how I am trying to present here. And when we have the different banks that are there, we have big banks, maybe some of them are small cooperative banks with one branches. There are the non-banks, we have the big techs, the fintechs, etc. And the more the endpoints we have, the more messier is it to manage them. But it is our responsibility to provide them and the customer access to infrastructure, because it is we who have allowed them entry into the financial system. I remember the British vet surgeon, and vet means veterinary surgeon, and the author of enjoyable stories like about the farm animals in his book, The Lord God Made Them All. Why I remember the book is that because these are the entities whom we have created, and it is the interoperability that we have brought in. And though the interoperability is tough to achieve, but actually the benefits to the society is significant. And banking has actually changed over a period of time thanks to extensive use of technology. And because of the core banking solutions and use of internet and mobile banking, customers use less of bank branches. And over a period of time, we are seeing that the visits of customers to bank branches is almost just 10% of their total transactions. Now, what were being labeled typically as alternate delivery channels are no more so, and all bank services are now available at the click of a button. And digital-only banks and non-banks are becoming increasingly popular. Incidentally, India has the highest fintech adoption percentage across the globe as well. Given the demand for the interoperable infrastructure, we have also operationalized many of yours for payment systems to work on a 24/7/365 basis, be it RTGS, be it the popular fast payment systems, which we call or which are known as the Unified Payments Interface. Also, another fast payment system, which is the Interbank Immediate Mobile Payment System, the IMPS. All these things are available on a 24/7/365 basis. In fact, interbank settlements, thanks to the availability of RTGS, also happen on all days of the week. Even government benefit transfers are effected directly to the bank accounts of beneficiaries at the click of a button. We have homegrown solutions to manage our payment systems, like for the messaging standards, we have our own structured financial messaging solution. We have our own communication network, which is the Indian Financial Network, for effecting all these transactions. All in all, we have a very robust and feature-rich payment systems that functions all through the day and year. Of course, maintaining cyber hygiene becomes extremely critical here because the time for system hygiene activities is extremely minimal. And over a period of time, what we have also thought of and we are practicing is to have a direct regulation over all the intermediaries in the value chain. When we are looking at the direct regulation, you will agree that the central bank will be extremely busy, and to keep the systems efficient and running, the demand for cyber resilience and ensuring safety and security of all systems is very, very high. My thrust on interoperable system in the earlier context is also about how banks are actually making revenues from transactional banking and digitization of transactions, because by churning funds and encouraging customers to use their money more and more, the banks are actually trying to earn more spends and more revenues there. And with the entry of fintechs and big techs in the financial sector, we are seeing that the route to for them to enter is through the payment systems, because this is where they get access to data and they try to see how the customer behaves and then try to sell them the tailored products. So without data, will there be concerns of cyber security? Of course, I think the data is the most significant part where the cyber hackers and other activists are very keen to attack and cause threats, because whether they are hackers, whether they are white, black, green, whatever colors of hats they wear, they are here to actually look at the data. We have seen the breach at the Reserve Bank of New Zealand in January this year. We have also seen that the account takeover fraud has become rampant, and according to analysts, this year such frauds are likely to be over more than half of the total financial frauds. Login credentials to bank accounts are fraudulently taken, and they are also changed and thereafter used to make unauthorized transactions from such accounts. Customers are also tricked in passing on information. Another fraud that has always been popular, other type, is the online transaction, when fraudsters are using various schemes and scams to make people voluntarily transfer their money or provide payment information by pretending to raise funds for charity or posing as customer support executives, etc. Of course, some of them even make customers download certain apps or click on certain links sent through SMSs and mails. So what we are trying to do, I don't want to talk about the other types of attacks. SolarWinds attack was prominently mentioned in the earlier sessions, so I don't want to talk about them. But even in India, we have had certain merchants who have seen data compromises, be it the national carrier, the Air India, or even the popular pizza chain, Domino's. There have been certain data compromises. And when it happens at the merchants, and central banks do not have any control over them. And how do we handle such instances? Our credibility is at stake, because once the data that is lost gets used, then it's very difficult to protect the customers. And sometimes when such loss of data is seen, the urge for everyone, for the RBI to step in as a residual regulator comes also to the fore. So we have taken certain steps. Next slide will depict some of them. Renuka, can you move, please? Yeah, so what we are trying to do is our focus has been extremely seriously on data. So we have said that how can we reduce the impact of loss of data? And even if the card or other data is lost, how do we reduce its misuse? Can we nip problems in the bud? So what we have done is we are saying that the data should be stored, especially for the domestic payment transactions, in a system only in India, because the responsibility of safekeeping of data is of everyone. The more the data is stored by individuals and entities, the more they are prone to risks of using more resources, increasing breaches, and probably sometimes not knowing what to do with it as well. So what we have said is that the local data storage of end-to-end payment transaction data should be within the country. So this also takes care of those intermediaries in the payment value chain who probably store data, but the other connecting entities do not know who is storing what data and what to do with such data. And this also enables us to have unfettered supervisory access. And we also, as I was saying, move to direct regulation. So when we are authorizing these payment aggregators, etc., we do tell them that you and the merchants onboarded by you cannot store the customer data on your systems, so that the less points of storage, probably the less areas of compromise. And one more thing, what we have done is we have tried to tokenize the data of the cards that the customers hold, so that what the merchants get is a tokenized data and there is no misuse at the merchant's end of the customer data. And we are also trying to push in contactless transactions, because we feel that the present social distancing requirements, as also of the need to use fewer and fewer merchant touch points, can be enabled through the contactless features. One another requirement in India is we have the second factor of authentication for every transaction, whether online or card present transaction. So even if the card data is lost, you need a PIN or a password or a OTP to complete a transaction. This we feel will help the misuse of data in case of compromise. One another feature we have recently introduced is about the switch on and switch off of card features. For example, if I have a debit or a credit card, it is possible for me to switch on or switch off the features for usage across domestic points, international points, ATMs, online, contactless, etc. Because even if the card is compromised, I can easily switch off the card features on my mobile or on other facilities provided by banks, because of which the compromise can be minimized. And I can even set limits for the usage of the cards. So this is one area we are trying to attack or concentrate to ensure that the card compromise is not there. And even sometimes we have seen that there are these phishing or social media attacks being performed to take away the login credentials or even passwords, etc., from the customers. Once the data compromise is there, if the customer's email ID or mobile numbers are made available on the web. So what we are trying to do is Reserve Bank is also getting heavily into social media campaigns, and we have something what we call as RBI Says or RBI Kehta Hai, where we come on the print media, TV media, and other media to create awareness and warn the users about how to use the digital means more safely and securely. But control on data is not enough. Cyber resilience on the institutions that handle this data is also necessary. And as you would have seen, there are many players in the Indian financial ecosystem and under the domain of RBI. As my colleague from MAS mentioned, we also follow the CPMI IS Core guidance framework on cyber resilience for FMIs. We've also brought out an extensive document on FMIs and retail payment systems covering, among many things, cyber security controls, cyber resilience, etc. Because of the foresight of the RBI top management, in June 2015, an exclusive cell has been created in Reserve Bank of India under the Department of Supervision vertical for cyber security, what we call as the C-side cell, cyber security and IT examination cell, which actually is a single point area for strengthening the institutional defenses to address cyber risks. And it has brought out a path-breaking comprehensive cyber security framework that was issued to all commercial banks in 2016. This is also available on the website of RBI. And it covers the broad board-approved policy for cybersecurity, the arrangements for continuing surveillance, having a cyber crisis management plan, sharing of information on cybersecurity incidents with the RBI, involvement of top management of banks, etc. And this cell singularly takes care of all activities relating to cyber resiliency of regulated institutions, including incident monitoring, carrying out scrutinies, issuance of circulars, as also alerts and advisories in the event of any malicious attack or a threat to the financial ecosystem. In December 2019, the cell also has issued cybersecurity controls for third-party ATM switch application service providers. And over a period of time, the scope of this cell's activities has been enhanced to cover cooperative banks and non-banks as well. And the cybersecurity framework for banks has been extended to non-banks, and they've also issued comprehensive guidelines on digital payment security controls. So this cell also looks at offsite collection of returns and other reports in terms of knowing the cyber posture of the entities. It also conducts various scrutinies and provides even desktop exercises it conducts on cyber readiness. This Seaside cell also carries out on-site assessments of banks covering IT governance. We also carry out IT risk management. Controls are checked during these assessments, as also security audits and spot assessments are conducted. Sometimes we also have these thematic reviews being conducted on network security, database security, payment system security, etc. And for this, what we also have taken support is of the subsidiary that has been created by RBI, which is the Reserve Bank Information Technology Private Limited, what we call as REBIT. And REBIT has been set up by the Reserve Bank in 2016 to serve the Reserve Bank's IT and cyber security needs and to improve the cyber resilience of the Indian banking industry. This is yet another unique initiative of RBI. REBIT also helps guide the regulated entities in their IT areas of operations and also advises, delivers, and manages IT projects for RBI. They also safeguard RBI assets by monitoring and responding to cyber threats through designing and operating security infrastructure and related services. REBIT also has verticals concentrating on research and innovation. One more subsidiary has been created by the Reserve Bank, what we call as the IDRBT in 1996. IDRBT actually engages in IT and cyber risk capacity building of the boards of banks, their senior management, and the CXOs. It also provides certification programs on IT and cyber security, conducts mobile app testing of banks, carries out active cyber drills, organizes industry fora, etc. And a lot of research in security technologies are being conducted by the subsidiary of the RBI. As we get into more open systems, more networks, more open source architecture, more banking that's open, and of course, as we enter into cross-border payment linkages, all the concerns are only going to increase. One point I want to mention here is that whatever may be the situation, we need to stick to the basics, maintain and manage well the firewalls, the privileges, the antiviruses, patches, the certifications, the audits, the monitoring, etc. And let me talk about cricket here, like be it the test or the one-dayers or the T20s. The player has a good technique, performance will be assured, and the success will be guaranteed. We need not worry about the cyber risks. If we have proper techniques and practices in place and a good cyber hygiene to follow, we need not be scared of any of these cyber risks. I will differ with Robert when he was talking about the threat landscape here. But let me stop here because I feel my time is getting over. I'll cover a few more topics as we probably get an opportunity when we get into the panel discussion. Thank you very much for a patient hearing, and let me wish the deliberations all success. Thank you very much.
Thank you very much, Vasu. I just wanted to thank Yao and Vasu for their very, very insightful, detailed presentations. And I have to say, I apologize that we only gave each of you 15 minutes and it's simply not enough time to do justice to the very broad and, as was clearly evident, very complex amount of work that both of your institutions are undertaking. There is in the chat function and the Q&A function a lot of discussion at the moment. So thank you for posting questions and to colleagues who are responding accordingly. And there are some questions around how do you do information sharing? Are there international exercises? Things like that. So the next session is actually going to try and focus a little bit on that. In this next session, we're now going to turn to a sequence of 4 different videos, which are going to discuss examples and initiatives in different countries and jurisdictions around information intelligence sharing, around cyber testing, around managing endpoint security for wholesale payment systems, and around crisis and cyber exercising more broadly. It's my delight, and I do say that genuinely because I've worked with all of the forthcoming colleagues in some capacity. So it's a real privilege for me to introduce them. We will have a video from Konstantinos Christoforides from the European Central Bank, who will speak about the Cyber Information and Intelligence Sharing Initiative, CCEU, which has been launched across the European Union by the European Central Bank. And on a panel that will follow the 4 videos, we will have Fiona Vanashelpol, who is the Deputy Director General in the Market Infrastructure and Payments Director at the European Central Bank. We have Rogier Besme from the Dutch National Bank, who will talk about the Tiber program, which is the threat intelligence-based ethical red teaming program, as has been launched again in the European Union and has been very much led by the Dutch National Bank as an exemplary institution in this area. We have Takeshi Shirakami, who is the Deputy Head of Secretariat for the Committee on Payments and Market Infrastructure, CPMI, and he will present the CPMI strategy on endpoint security. And finally, we will have David Papushvi, who is the Deputy Head of Specialized Risk Department at the National Bank of Georgia, and he will discuss exercising. Once these 4 short videos are played, we will then move and transition onto a panel discussion with all of the representatives. The panel will be moderated by my colleague Harish Natarajan from the World Bank. Harish leads the global team on payments and market infrastructures in the finance, competitiveness and innovation global practice at the World Bank. Just before we move into the videos, what I did want to say is that a lot of questions have been asked. And so we will have an opportunity, hopefully with Vasu and Yao in the panel towards the end of the day, where we will convene Vasu, Yao, and also our colleagues from South Africa and Bank of Canada. So some of these questions we're deferring to that session, so please do be patient. And here I would now turn to Ginu to play the video.
I'd like to thank the colleagues of FIGI and the IMF and the World Bank for their kind invitation. My name is Takeshi Shirakami from the CPMI Secretariat of the Bank for International Settlements. The topic of this session is cyber resilience for digital payments and financial infrastructure in emerging markets and developing economies. In my remarks today, I would like to focus on one very specific area where the CPMI has been working in the last few years, which is wholesale payments endpoint security. It relates to cyber resilience broadly, but it is a very specific area relating to wholesale payment systems or large value payment systems. These systems are operated by central banks and are used for interbank settlements in financial markets. The CPMI set out a strategy to reduce the risk of wholesale payments endpoint fraud. This work was launched in 2016, shortly after the Bangladesh Central Bank heist, which I think many of the audience are very familiar with. The ecosystem of financial market infrastructures is complex and interconnected, involving different types of systems and a large number of financial institutions and individual users. At the core sits a large value payment system, a wholesale payment system. In the recent years, an increasing number of wholesale payment systems have been undergoing significant changes and transformation in response to digitalization of payments. They are becoming more interoperable with other systems. Some payment systems have extended their operating hours. Some are open near 24/7. They are offering payment services accounts to a wider range of financial institutions, including non-banks and fintech startups. All these new developments are very much welcome, I think. They will help to reduce the cost of payments, including the cost of cross-border payments, and will improve end-user experience and financial inclusion. However, one flip side of these may be that payment systems now have broader attack surface for cyber criminals. Criminals go to where money is, and large value payment systems are no exception. And there are many challenges that are particularly relevant to FMIs because of their nature as a network, as shown on this slide. In response to these challenges, the CPMI has been pursuing a two-pronged approach: protect the core and secure the periphery. By the core, I mean wholesale payment systems and other types of FMIs, such as central counterparties, which sit at the center. By the periphery, I mean numerous entry points scattered across the FMI ecosystem, including users of FMIs, banks and broker-dealers, and other service providers. June 2016, the CPMI, together with IOSCO, issued guidance on cyber resilience for FMIs. It is guidance to the CPMI-IOSCO Principles for Financial Market Infrastructures, PFMI. In particular, it provides detailed guidance to PFMI Principle 17 on operational risk. Since then, we are working hard to engage with the industry and encourage the industry and jurisdictions to implement the guidance. There are now 3 industry working groups working on 3 important topics. The first, data integrity and data reconciliation after cyber incidents. Secondly, information sharing framework. Thirdly, how to manage the risks associated with the use of third-party service providers in the context of cyber resilience. Now let me move on to the endpoints, the CPMI strategy to reduce the risk of wholesale payments endpoint fraud. It is a central bank strategy, and it addresses all relevant stakeholders in the wholesale payment ecosystem. For the reason I mentioned earlier, the ecosystem is highly interconnected. It sets out action plan for various types of stakeholders, and so which include operators of wholesale payment systems, operators of messaging networks such as SWIFT, users of these systems and networks such as banks and other financial institutions, and overseers and supervisors of these systems and networks, and also supervisors of users such as bank supervisors. And the strategy takes a holistic approach with 7 elements. To facilitate the operationalization of the strategy, the CPMI developed so-called toolkit, which is available on the CPMI website. It offers more than 50 emerging practices that we think will help payment systems operators, supervisors, and relevant stakeholders to advance each component of the strategy. I would encourage all of you to go to the website, CPMI website, and take a look at the toolkit. It really offers very practical action items for you to consider in your context. To advance the strategy, we have been reaching out to global central bank community, including those in emerging markets and developing economies. The FMI ecosystem is interconnected, as I mentioned earlier. The issue is global, and we need a global approach and solution. In this respect, capacity building is particularly important. We have been collaborating with the Financial Stability Institute at the BIS. We have produced online tutorials on cyber and wholesale payments fraud. With this, I would like to emphasize one important point, which is central banks play different roles, and we should learn from each other from these different roles that central banks play. Central banks are operators of payment systems. Central banks are overseers of payment systems, and also users of systems for monetary policy and the lender of last resort function. And central banks are also supervisors of banks that use payment systems. And also central bank uses service provided by other central banks for FX reserve management. So I would like to encourage all of you to talk to your colleagues within your central banks. Please talk across silos so that you can share a holistic perspective to protect the wholesale payment ecosystem. As risk environments never stop evolving, it is hugely important that we also never stop learning from each other. Thank you for your attention.
My name is Rogier Bezema. I'm head of the cyber unit at the Nederlandse Bank. Previously, I worked in both the government and private sector. I've led the development of the earlier Tiber NL framework since 2016. We've developed the framework in close collaboration with both the financial sector and the security sector. Following its success, the European Central Bank launched Tiber EU in 2018. There are other frameworks around the world that use processes similar to Tiber. Frameworks have been developed by the UK, Saudi Arabia, Singapore, Hong Kong, and most recently Australia. Tiber EU is compatible with all of them. Tiber stands for Threat Intelligence-Based Ethical Red Teaming. In a nutshell, it offers the most sophisticated hack test to see how the cyber defenses of financial institutions hold against current advanced attackers. Hacking is a little scary, of course, especially as Tiber targets the live production systems of our most critical financial institutions. Exactly this is why we've developed the Tiber EU framework. It provides a safe place to do unsafe things. The aim of Tiber tests is to learn and improve. In addition to testing, we have set up per country communities of financial institutions that share findings and remedies that help each other. Most participants are commercial institutions. While in the outside world they are competitors, within this community they need to be able to depend on each other in terms of safety and business continuity. And it works. We've seen openness, courage, and a willingness to share and learn. At present, 14 out of 27 European countries have adopted Tiber EU. This includes the largest economies: France, Germany, Spain, and Italy. These 14 countries combined join forces in the Tiber EU Knowledge Center. Here we share findings and keep the framework up to date. We conduct tests together and work to build and maintain our community of financial institutions. We hope to roll out the Tiber initiative across the globe. We believe it is an essential tool for improving the cyber resilience of the financial sector, third-party providers, and the wider ecosystem. Please enjoy the following animation about Tiber.
Every day, citizens, companies, and governments carry out financial transactions via the financial system. Today, we live in an age where cyber attackers are becoming more sophisticated and more persistent. Cyberspace has become the new front for warfare. Against this backdrop, the ECB, central banks in EU countries, and the most critical financial institutions play a pivotal role. They need to boost their cyber resilience to ensure financial stability. That's why in 2018, the ECB published the Tiber EU testing framework to help raise the level of cyber resilience across the financial sector. Tiber, Threat Intelligence-Based Ethical Red Teaming. These Tiber tests are conducted by financial institutions who hire ethical hackers. These hackers are known as the Red Team. They simulate a real cyber attack. Only a few people from the bank know of this exercise. Of course, the financial institution defends itself. This defensive team is called the Blue Team. The Red Team base their attack on threat intelligence to emulate real attackers. The goal is to learn from the findings and improve the cyber resilience of the financial institution. The anonymized findings are also shared with other stakeholders. At EU level, central banks collaborate in the Tiber EU Knowledge Centre. Here, they ensure tests are conducted with the same level of quality across Europe. Tiber EU is a successful example of cybersecurity collaboration. Tiber is more than just testing. It is a movement recognizing you only know your true cybersecurity defense if you actually put it to the test. The Tiber framework can be used across the world and also outside the financial sector to improve relatively mature organizations. It has proven effective in the financial, energy, telecommunications, and IT services sector. Trust, openness, and collaboration are at the heart of Tiber. Please join us on our journey.
My name is Konstantinos Christoforidis, and I work at the European Central Bank, where I'm one of the key people responsible for delivering CCEU. I think we all hear regularly in the news that there is a new cyber attack that has occurred, but maybe we're becoming a bit desensitized and do not fully comprehend how the impact of such attacks is becoming more and more devastating. Some weeks ago in the US, there was a state of emergency declared because of one such cyber attack to a critical infrastructure. This was unthinkable 10 years ago, and so was our dependency on the cyberspace. Today, we are all dependent on this cyberspace. And when I say we, I mean from national authorities to financial entities to energy companies, everyone is cyberspace dependent. The cyber threat, unfortunately, does not distinguish between borders or industries. It's gradually becoming more intrusive, and the attacks are getting bigger, more sophisticated, elaborate, with more geopolitical motivation behind these attacks. One such example is the attack on SolarWinds, which is an IT vendor which produces a management software which is used by many of the critical infrastructures. The attackers compromised SolarWinds and then leveraged the tools of the company to attack other infrastructures around the globe. This elevated risk situation with respect to cyber is demonstrated by the inclusion of cybersecurity very high on risk reports, such as of the World Economic Forum. And also the ECB president has also said that a financial crisis may occur due to a cyber attack. In Europe, we noticed that financial infrastructures were addressing cyber resilience more or less from the institutional perspective. And even though this is clearly needed, it's not enough. And when we were doing crisis contingency exercises and crisis communication exercises, we noticed that the most critical financial entities and infrastructures in Europe do not really talk to each other, even though the attackers are definitely sharing information among themselves in order to make their attacks more dangerous. So this led to the creation of the Euro Cyber Resilience Board, which brought together the most prominent financial infrastructures in Europe, central banks, service providers like SWIFT and SIA, as well as the relevant stakeholders in Europe, which are Europol and ENISA. This board is chaired by an executive board member of the ECB and is attended only by the C-level executives of these institutions, because in antithesis to normal cyber initiatives, which are driven from the bottom up, we really wanted these entities to commit, endorse, and drive these cyber initiatives. The most mature cyber initiative that was driven under the ECRB is the Cyber Information and Intelligence Sharing Initiative for the European infrastructures. And the core objective of this initiative were to protect the financial ecosystem by helping in preventing, detecting, and responding to cyber attacks, but also to facilitate the sharing of information, intelligence, as well as the best practices and experiences among the financial infrastructure, as well as to raise awareness of cybersecurity threats across the board. We were quite careful to remove regulatory judgment from this initiative in order to foster that collaboration which is necessary among the members for them to be able to share information, albeit on a voluntary basis. Together, we chose the best of breed malware information sharing platform, also known as the MISP, which is based on an open technology. And on top of that, we chose a top-of-the-line threat intelligence platform supplemented by one of the best threat intelligence analysts in the market. The members connect to the MISP and they share the technical indicators of compromise, which are then fed into this threat intelligence platform, and more context is put using the knowledge and the experience of these threat intelligence analysts. This platform is called Threat Match. This platform is more user-centric, and it also gives more context in the tools, techniques, and procedures of the attackers, as well as it gives the strategic view of the entire threat landscape of these financial infrastructures. This platform is also used as an early warning system and can be used as such in both an anonymous and an eponymous way. And it's also a way that the members and the users of this community can collaborate and also work on cyber threat intelligence initiatives. Every month, we host the trusted group calls, and the community is invited to talk about the latest attack trends, as well as share the best practices that they use in order to mitigate these attacks. And every 6 months, we create a bespoke report that goes to the ECRB, to the C-level executives, in order to educate them and spread awareness on the threat landscape and how we see it changing within the next 6 months. Even though it was not the intention when CC was being built, we have also shared the building blocks of CC, and we have actually uploaded them on the ECB website. Our intention is for any jurisdiction, industry, or group of interested entities that want to build their own information sharing initiative to use them. They are a terms of reference document, a rule book, and also a practical example of what goes on in an information sharing arrangement. We have been very happy to see jurisdictions actually adopting and building their own CC-like initiatives using these templates. This also aligns with the next target we have for CC, which is to build strategic partnerships with such information sharing agreements and actually develop a network of information sharing networks, which will strengthen the financial ecosystem on a global basis. Another thing that is important to mention is that the costs were shared equally between all the members in the community, and that this resulted in a very cost-effective solution. Also, as in building this initiative, we had to define all the types of information to be shared, being tactical, operational, and strategic intelligence, as well as how these would be disseminated in the community and also at which level. In closing, cyber resilience is not a state. It's an ever-shifting aspiration. And I think improving our cyber resilience and staying ahead of our adversaries requires ceaseless efforts on all of us. We are all individually responsible, but we are stronger together.
Hello, everyone. My name is David Papuashvili, and I represent the National Bank of Georgia. What I would like to discuss is crisis simulation exercises and the experiences that we have had with this process at the National Bank of Georgia and within the nation itself. Just to give you a background, crisis simulation exercises are an important aspect of preparedness. On August the 8th, 2008, distributed denial of service attacks began to affect Georgian government and commercial websites when the Beijing Olympic Games were about to commence. These cyber attacks, they coincided with the actual Russo-Georgian war on the ground. And the denial of service attacks, they targeted public, media, banking and finance, telecommunications, and the energy sectors of Georgia. To give you a perspective of some of the impacts that the cyber attacks had on the nation, was that in addition to the denial of service attacks, hackers were also able to modify the central bank's webpage, they modified the content and they changed the official exchange rate that was published for a specific date in August of 2008. As a precaution, and in addition to some of the other events that were happening at the time, many of the Georgian banks disconnected their servers from the internet. And as a result, most bank clients were blocked from accessing essential financial services for about 10 days. There was an additional aspect to these events in the form that the main fiber optic cable that connected eastern and western Georgia was also damaged during the hostilities. And the banks were unable to properly communicate with one another. Let's say the branches with the head offices that were located in the capital of Tbilisi. So these events, they demonstrated the need to conduct crisis simulation exercises. And what we have done so far is that we have conducted several crisis simulation exercises that began in 2017. We have jointly conducted the exercises with the World Bank. These games, you can call them, they're tabletop exercises, and they do not physically impact the financial institutions' information systems. So we essentially test the communication mechanisms between, let's say, the central bank and the commercial banks. So all of the communication that is done during these exercises is conducted electronically. They cover the area of cyber risk specifically, and it includes both the private and the public sector communication in many cases. In terms of the impact of the crisis simulation exercises and the general impact that they have had on financial supervision is that there has been an increased awareness about cybersecurity within the NBG as well as outside of the NBG. So the process has also speeded up the development and introduction of cybersecurity supervisory regulations and the general framework itself. It has also indirectly led to the creation of a new cyber risk supervisory unit within the NBG, which has been branched out from the operational risk division. And there is also the aspect of improved situational awareness of financial institutions about information technology related incidents. Now, some of the key observations that we have had so far based on these games is that the simulation exercises, they never fully mimic reality, but they're also very valuable at the same time. They allow the players to rehearse beforehand what an actual event may potentially lead to. These games are also a good mechanism to test the process of incident response. The financial institutions have used past experience. We know from a few of the banks that they have used the experience that they have gained during the crisis simulation exercises and their real life scenarios. So these exercises can also be important for decision-making associated with the recovery of operations. Now, some of the potential outcomes of the exercises might be raising the level of cyber risk awareness. It also allows the participants to practice decision-making skills. In addition to that, one of the added benefits might be to understand the severity of the impact of a potential cyber incident or event, and also to improve crisis management skills. With the possible primary roles involved, you could have, let's say, commercial banks, you could also have non-bank financial institutions, you could have other financial institutions besides the primary role of the central bank in this process. In addition to that, the computer emergency and response team could also be involved, as well as the Ministry of Finance and some of the other organizations that might be directly or even indirectly linked to the crisis simulation exercise. So simple roles within the central bank, you could also choose based on the types of structural units that might be involved within the exercise. For example, you might involve the supervisory team as well as the top management of a central bank. And some of the potential scenarios that might be considered, again, from our own experience, you could think of general DDoS or denial of service attacks, as well as unauthorized money transfers, phishing attempts, issues associated potentially with settlement and clearing systems or system disruptions in general, and so on. Or you could use a combination of any one of these scenarios, depending on the type of environment that the exercise is being conducted in. From the perspective of lessons learned, to make the game more effective, organizations can involve as many realistic stakeholders as possible. Whoever conducts these exercises should make these games as realistic as possible. You should also identify the critical dependencies between the financial and other sectors of the economy, pre-plan the details, and make sure to get the names of all the stakeholders right, just to make things more effective and to make the exercise more accurate, and do not extend the duration of the games beyond what is needed. Essentially, do not make the games too long. So that is what I wanted to say for now, and that is all. Thank you.
Thank you very much. I want to, before we move into the panel discussion, just wanted to reiterate that we will, following the forthcoming panel, move into the next session where there will be a presentation from the South African Reserve Bank and the Bank of Canada, and then we will convene all of the 4 central bankers for a detailed panel discussion where we will have an opportunity to dig a little bit deeper into their different approaches. But before that, I'm very happy to now turn to Harish from the World Bank, who will moderate the panel. And I would request Fiona, Takeshi, Rohir, and David to switch on your cameras and welcome. Thank you.
Thank you, Imran, and thank you to all the panelists for the excellent presentation. I think it brought to life some of the concepts which we discussed in the previous panel, and also it was a good way for David to end by reminding us not to play the game too long. So let me also welcome everybody to the FIGI Symposium, and also to the Global Payments Week. This is the first of the technical sessions under the Global Payments Week, and we have a few other sessions lined up in the coming weeks. Let me start by posing a question to Robert. Based on your presentation on the threat landscape, what are your expectations vis-a-vis central banks, and how would you recommend they decide which tools to implement first? There are various tools which we discussed in the sessions today. So if you can talk a little bit about some of the sequencing based on your assessment of the threat landscape.
Okay. I certainly think one key thing, one key message that was coming out from all of those, and that was the first time I had the opportunity to see those presentations, was communication and collaboration and working together and ecosystems. There's a lot of very powerful tools there, especially things like Tiber and CC. They've been incredibly effective, and the fact that so many nations have picked those up and run with it just shows how powerful a tool it is. But moving away from those big things, I think some of the smaller tools are probably just as important, and obviously communication is one of those. Just talking to industry and talking to the community and industry and all of the partners that are involved, the suppliers as well, about what you want to achieve, why you want to achieve it, and the benefits for everyone, from national to citizen to the financial institutions themselves. That's really key, because ultimately what that does as well is that builds trust. And trust is everything for these kinds of things, right? If you're building a community of financial institutions who you're trying to get them to share intelligence with, or share their remediation advice with other organizations, you need a level of trust there. And unless they see their faces and meet up occasionally and do those sorts of things, you're going to move forward a lot slower. And I think one of the great things that they do within Tiber is they have things like the generic threat landscape papers. And when those are written, that's not just always a vendor or a central bank writing those. Quite often people come together as a community to, the central bank, the intelligence providers, the financial services, and they talk about the threat together. And that's a great way to start building an ecosystem and a community and communicating as well. And evidently, I am really biased, right? I've been doing intelligence work for 12 years. I believe that intelligence is the center of every decision, right? We need to do all of this based on what the intelligence tells us. And for me, building that community at the beginning, communicating, creating trust, where you're verbalizing things as well, is the best place to start, because that's when you're talking about intelligence. That's when you start leading into things like the CCs and the Tibers and those types of work. But ultimately as well, they're all great tools, but where do you start? Apart from communication, I think in reality, the people that put this together, there's obviously incredible resource and specializations within the IMF, within the World Bank, within ITU. Emran mentioned he'd worked with all of these people and these organizations, and so and he's within the IMF, so being able to lean on those types of organizations and ask for their advice. How do we start these things? How do we know which tools we should pick? Is probably the very first step you should take.
Thank you, Robert. One of the other points is today, of course, we do not have any private sector institutions in the panel. You, in some sense, I interact with them quite extensively and I have a sense of their perspectives. What do you think is the role of the private sector here, given, of course, that they, of course, have significant skin in the game here, so to say, and then, of course, they have a big role to play in terms of education of the customers and so on. So if you can maybe talk a little bit about the role of the private sector.
Yeah, I think it's critical as well. I mean, let's not forget what we're dealing with now: cybersecurity, cyber resilience, digital resilience. This is all pretty much brand new industry, right? Gone are the days of being able to rely on centralized direction, and governments, public entities have such limited resource and limited specialities and time and money. We really need to be working more with the financial institutions, the vendors, the suppliers as a community, because it's an incredibly complex problem. And without everyone being involved, we're not going to solve it. Just as an example from myself, over the last 12 months, I've worked in over 100 threat assessments. I lead multiple intelligence sharing communities. I work with the different institutions here. I've worked across 5 different continents, God knows how many countries, worked on many incidents, and that's knowledge that I have. And there's lots of ROBs in lots of other suppliers and other financial institutions. And we need to bring all of that stuff together. And that's where the expertise sits. We can't try and just solve this as a central bank or as a regulator or as an individual financial organization. Critical, and evidently, situations like this, bringing in people and the central banks with the IMF and the World Bank and the ITU is the best place to start.
Thank you, Robert. Let me now turn to Takeshi. Takeshi, you talked about the endpoint security framework, and it's been a few years since it has been launched, and there's been quite a bit of progress. So what is the feedback you're getting, Takeshi, from the central banks on the use of the endpoint security methodology? And then if you could also talk a little bit about the next steps you're planning, of course, the whole the training sessions you're organizing with the FSI is, of course, very helpful. And if there are any other plans from your side, if you could please talk about that. Thank you.
Thank you, Harish. So in terms of the feedback we are receiving, I would say we are receiving rather encouraging feedback, and I'm positively surprised about it. Let me explain why. So when we were still in an early stage of developing this strategy to strengthen the wholesale payments security, endpoint security, so we organized a couple of industry engagement meetings, and the reaction from the industry participants there was not very enthusiastic. At least that was the impression. And industry participants, which I mean operators, payment systems, and messaging supervisor, service providers, and also large correspondent banks, they sounded a bit skeptical about the value of our initiative to strengthen the endpoint security. So they were also a bit nervous or hesitant to talk about their day-to-day challenges they are facing in dealing with the threat of wholesale payments fraud. Then we organized industry workshops twice, I think, after the publication of the strategy. So there we were surprised to see how forthcoming industry participants had become. So they are more willing to share challenges, areas for improvement, and also emerging practices for improvement. So they seems to have understood it was okay to share or talk more openly about potential weaknesses. So when we try to strengthen endpoint security or cyber resilience more generally, I think we often face so-called collective action problem. So individual actions needs to be sort of supported, supplemented by collective actions. And we need good coordination and framework and processes. And we need to build and foster trust among stakeholders in the first place so that we can talk more freely and openly, as I think Robert was also mentioning. So I do hope we all will be able to meet physically and safely in not so distant future to discuss all these issues. And finally, we are particularly glad that we are also receiving good feedback from emerging market economies about the initiative. So many regional associations of central banks invited us and presented us with the opportunity to present a strategy in the event. So in this respect, I'm particularly happy to be here today to present the work and with so many attendees from around the world. When it comes to the next steps, so at the moment, because of the COVID, as I mentioned, we cannot really meet physically to exchange, emerging practices and in a free format. But we will continue with global outreach and encourage dialogue across jurisdictions and dialogue among relevant stakeholders, which include a wide range of stakeholders, including payment system operators, their overseers, and correspondent banks and customers and bank supervisors. And cross-border and global dialogue is important and valuable because it is not unusual that there's only one wholesale payment system in a country, which is most likely to be operated by the central banks, the country's central banks, and they don't have any peers to discuss with or to share notes with or find out better ways of doing things. So in this respect, I think cross-border cooperation or dialogue is very valuable for central banks operating wholesale payment systems. And then, as I mentioned, we organized 2 industry workshops. And then in these workshops, we collected a number of emerging practices to put 7 elements of the strategy into practice. And these are very practical and pragmatic things to do. It's just an exercise of common sense. Let me give you a few examples. In terms of element 1 of the strategy, identify and understand the range of risk. So one practical practice would be that the operators of systems conduct a formal annual assessment to identify security risks, very basic. And element 3, promote adherence to securities requirement. One practice would be that the payment system operators require each system participants to self-attest at least annually to their adherence to the security requirement of the systems, which is again a very basic things to do. And then element 4, information and tools to improve prevention and detection. So payment system operators can use information tools to prevent fraud by identifying and blocking in real time potentially fraudulent payments before they are processed, and then agree internally and externally with counterparties ex ante on steps that could be taken quickly in case a suspicious payment is spotted. Again, a very basic procedure, I think. And for example, element 5, last example, respond to a potential fraud in a timely way. A very practical and basic practice would be to always keep up to date emergency contact list, including contact details that you can use 24/7, which sounds very basic, but in the reality, it's not being done always. So as you see, these are quite simple and sound basic things. They wouldn't require any rocket science, but nonetheless could be very effective in many cases. So these are the bit like the measures to improve our collective hygiene we do in the COVID pandemic. So it's something like we can do individually, but collectively we can protect others in the ecosystem. And the CPMI published a list of these examples on the website as a toolkit document. And this document is a living document, and we plan to further enrich this common knowledge base that I hope benefit the entire industry. So please do take a look at the document on the website. Let me stop here. Thank you.
Thank you, Takeshi. Please do also share the link on the chat window for in case colleagues are finding it difficult to look at the document, though I think it should be easily searchable. And then from the World Bank side, we have been very actively including this toolkit as part of this methodology as part of our technical assistance programs, and also are updating some of the standard bidding documents to start including some of the features which are required, which are recommended as part of this methodology. So let me now turn to the three central bankers who had presented. There were three different tools which are presented. What I would request all of you to respond to this question from your respective perspectives. One question is, can you tell us a little bit about the decision process for agreeing on the particular tool which you presented? Kind of what happened in the lead up to that, and how did you arrive at the final contours of the tool? And then the second part of the question is about kind of what are the lessons you have learned in applying the tool, and how has it impacted the policy changes and any of your procedural kind of aspects and so on. So how has it really helped you in changing your processes and then procedures? So let me start with Fiona, and then I will go to Roger, and then I'll conclude with David. Fiona, over to you.
Okay, thank you very much, Harish, for the nice introduction. So your first question on the challenge, maybe let me start with that part. So first taking the challenge that we tried to solve, and then looking a bit at the tool that we use, the CCEU, as nicely presented by Konstantinos before. So as part of our regular oversight work, for instance, as doing regular oversight assessments or cyber surveys or cyber communication exercises, or even simply in our dialogue with other central banks, be it in Europe or abroad, what we noticed was that market infrastructures were not really talking or collaborating with each other when it came to the topic of cyber. Now, they were talking, maybe let me rephrase that, they were talking, but they weren't really sharing information. They weren't really sharing information with regard to their own posture and what others could learn from that. And they weren't actually sharing information on serious attacks that they were aware of. And at that time, what we were seeing is that cyber criminals were doing the exact opposite. They were in very close contact with each other, and they were even collaborating. So we felt we needed to do something to address this. And when it comes to cyber resilience, an institution cannot afford to make wrong decisions. There's a lot of time and money and other resources that have to be invested here. Everybody is strapped when it comes to resources, so we need to focus on what works. This means we need to leverage off each other and what each other has learned. And the only way to successfully do that is by communicating and sharing information. And this works both ways. It's not enough to say, okay, we learn from what somebody has done before us. That means we also have to share back the information we have learned when we have gone forward with the next steps. So to achieve the full potential here, we felt that market infrastructures should feel comfortable sharing not only threat intelligence, but also information and best practices amongst this trusted group, the sharing community, as we call it. And to be able to do so, market infrastructure should understand that they all stand to gain from sharing information and intelligence, and they shouldn't be apprehensive about doing so. Cyber resilience is needed at overall ecosystem level. It's not only about the level of individual actors. And at the end of the day, we're all impacted by the weakest link in the ecosystem. So we really have to work together. And the tool which we developed and which Konstantinos explained, CICI, was in fact a product of what we would call collective thought, of deliberation and consensus agreement. And we formed a group, the high-level Euro Cyber Resilience Group. Within that, we had a group of the market participants that were there, and which were in the end the group of entities that were going to be sharing information among each other. And they agreed on the high-level principles and what was to be tackled with this information sharing platform. And then the group agreed on the technological topology that Konstantinos mentioned, and then the process for the vendor selection as well. And after the vendor process, we agreed on the onboarding process, and then we went into an operationalization mode. So this is essentially how we addressed the challenge and came to CICI EU. In terms of the benefits that we get as a central bank from this tool and the lessons that we've learned, well, the benefits with CICI EU actually started from the very beginning when we were going through the process of setting up the initiative in the first place. For us, it was the first time that we addressed market infrastructures and critical service providers as peers, and not purely from a regulatory or from an oversight perspective. And as a central bank, we started to comprehend the challenges that these entities were facing in dealing with the cyber threat landscape and how they perceive and handle cyber from a very practical and tangible perspective. And with this approach, we found that the entities were also much more open on how issues regarding cyber could be addressed. And this led to very fruitful brainstorming sessions with the industry participants in the group. And this has also given us insights as well as central banks for the work we are doing and the frameworks that we have. Roger mentioned Tiber. There are other frameworks there too, cyber resilience, oversight expectations. And from what we have learned in that group, we have been able to further develop and fine-tune these frameworks going forward. And the ECRB itself, the Euro Cyber Resilience Board, has also learned from the work of CICI, and it has been able to create further market-driven initiatives with the aim of addressing key cyber risks that the market is facing when it comes to these threats. And last but not least, and when we think of the ECB also as an operator of infrastructures, going back to what Takeshi mentioned, central banks generally are providers of major wholesale systems. So we as an infrastructure provider also learned a lot participating in this threat intelligence and information sharing initiative. So all in all, I would say that we have seen a lot of benefits for ourselves as central bank and for the financial sector and the community that we are working with in this area. Thank you.
Thank you. Thank you, Fiona. Let me move to Roger now. Roger, over to you.
Thank you, Arish. I think that what we are all trying to do is to be as effective as we can be in beefing up our defenses, like Fiona said as well. So indeed, trust, like Rob mentioned, and the sharing of information is really important. And what resonated with me quite strongly is Takeshi's remark that we need not only individual action per financial institution, for instance, but the collective action. And the collective action, that is exactly where the role of the central banks comes in. So what would be really effective within an ecosystem, but is not picked up by the financial institutions themselves, can be picked up by the central banks, and they really bring together other people and other institutions. So what's starting off with Tiber, coming back to the effectiveness of your defenses, what we saw in 2016, but we've also shared experiences with our colleagues from the Bank of England, who should be mentioned here as they've been driving their CBEST initiative since 2014 already. It's not enough to only work compliance-based. So when you ask institutions to do self-assessments regarding their cybersecurity, they will answer as good as they can, of course, but it's only, well, it highly depends on how well you know yourself. And after having finished many tests, believe me, your enemy knows parts of you better than you do know yourself. This is referring to Sun Tzu, of course, and I know that Emran will really love this, being a historian. But one part of his famous remark, know yourself, know your enemy, has been lost over the centuries, and that is know your ecosystem. So on top of this compliance-driven self-assessments and improving your security posture, it really helps to do some actual testing, to emulate attackers, not only on application level, but on your whole organization. So on targeting the people that work for you, the buildings you work in, the systems you use that underpin your critical functions, but also the services you offer. if you really take this into account as a whole, more of an holistic attack surface, that is really showing where your weaknesses, but the opportunities are as well for an attacker. So if you emulate this and you truly make sure that you emulate an attacker of a high level, that is where Tiber comes in and all the other initiatives that has been mentioned. If you do this well, if you do this in a controlled way, you can learn so much about it. And you find where you think your defenses have been effective, but in truth, they are not. So we've, I won't mention any names, but we've tested institutions that came out, their compliance-based assessments pretty green, had a high level, but we managed to attack their life critical systems without the institutions even knowing there was an attack going on. And these effects could be detrimental, not only on a national scale or in our case, a European, but also on a global scale. So what we learned is that the institutions themselves want to do this testing. Again, that is the role of the central bank. They won't build up a trusted community themselves, but they need help in that. And they really do want this because the testing we do is on a voluntary basis, but the institutions pay for their own tests. And even in our case, but it is in many cases in the 14 countries that are implementing Tiber or have implemented it already, the financial sector is co-financing the teams at the central banks to do this for them. So I think that really shows that they have got skin in the game. They want this testing to be on top of their normal compliance-based supervision to move on and to get better. So one of the learnings we have is if you do your testing, you become more effective in your cyber defenses. You get more board attention. If you do an internal red team exercise, for instance, that's normal business. But if you do a Tiber test, the board will know, the supervisor will know about the results, and it will be discussed. So from the IT side of organizations, I always hear, please come and do a Tiber test because that will help me build my budget as well. That's really helpful. Yeah, I'll leave it for now with this to give the others some floor as well. Thank you, Harish.
Thank you, Roger. So David, you concluded your slide, your presentation by saying we are playing the game. We should not play the game too long. We have been playing this panel too long now, so I think we need to kind of bring this to order soon. So maybe I would suggest to skip the first question, go straight to the second part, which is about kind of how has the tool helped you bring about certain changes in your policies, procedures, and the way you're approaching things. I think you covered the first part quite well already in your presentation. So that's why I'm requesting you to just focus on the second one. So over to you, David.
I will try to briefly address what we have done since the initial crisis simulation exercises that we conducted in 2017. So I would say that overall, one of the main benefits of the CSCs is that you get to raise the level of awareness within the organization in terms of cyber risk. So if cyber risk was not as important before, I think after conducting the crisis simulation exercises, people do see that cyber risk is a significant risk, which needs considerable attention. So following that, we drafted, following the initial crisis simulation exercise, we drafted our own cyber security framework, which is based on NIST, and it has a few additions. So it has some of the requirements that are associated with the SWIFT security controls, the customer security controls, as well as a new requirement that deals with penetration testing. So this was a new requirement for us, which was not required before. So penetration testing per se, this was something that we were indirectly asking the commercial banks to conduct. Following the introduction of our cyber risk regulation, we also had a formal mechanism of asking the financial institutions to conduct penetration tests as well. Now, in addition to that, we introduced the cybersecurity audit requirements, whereas before The main requirement in our operational risk regulation was to have an information systems audit. We specifically required the banks to conduct cyber security audits as well. Following that, what the CSE has indirectly done is that we have spun off a cyber risk supervisory unit from our operational risk division. So this was an additional aspect, I would say, an additional benefit to the exercises that we have done so far.
Great, thank you, David. That was quite useful, and thanks to all the panelists. Now, I had another question planned, but it looks like we are out of time, so I would perhaps skip that, and I'll pass it back to Dorothy. But maybe if you have the time, if you could in the chat window, maybe just share your perspectives on where should central banks who are starting off on this whole exercise on cybersecurity, strengthening the cybersecurity framework and improving the resilience. Where should they be starting? So if you have any inputs and advice to the central banks, please do enter that in the chat window. So with that, let me thank all of you for the excellent insights and then also for sharing your wisdom. Let me pass it back to Dorothy. Dorothy, over to you.
Thank you.
Thank you very much, Harish. After this very interesting discussion on specific tools, we will have again two central banks sharing their experiences. And then we will move into our long panel discussion on central bank experiences. So let me introduce Gerard Konge from the South African Reserve Bank. Is currently the head of the Cyber and Information Security Unit within the South African Reserve Bank. And Gerard has about 20 years experience covering cyber and information security IT governance, and IT risk management. After Gerard's presentation, we will have Isham El Bibeti, who is the